Part 28, Service associated with the bank. In this part, we are going to discussing about ATM, credit card and debit card facility provided by bank. ATM is an automated teller machine or automatic teller machine, which is an electronic computerized telecommunications device that allows a financial institutions customers to directly use a secure method of communication to access their bank accounts, order or make cash withdrawals and check their account balances without the need for a human bank teller or a cashier of a bank. Many ATMs also provides people to deposit cash, checks, transfer money between their bank accounts. An automated teller machine is an electronic banking outlet that allows customers to complete basic transactions without the aid of a branch representative or teller. Anyone with a credit card or debit card can access cash at most ATMs. ATMs are convenient, allowing consumers to perform quick self-service transactions such as deposits, cash withdrawals, bill payments, and transfers between accounts. Fees are commonly charged for cash withdrawals by the bank where the account is located, by the operator of the ATM, or by both. Some or all of these fees can be avoided by using an ATM operated directly by the bank that holds the account. The full form of this service is automated teller machine. The bank account holder is given this facility. When the customer needs, he can withdraw the minimum amount decided by the bank and lesser than the balance of his account. The bank account holder can withdraw limited amount from his account under the daily withdrawal limit. The limitation of maximum withdrawal amount in the single time is also fixed by the bank. The bank provides ATM card to the customer. The customer is also given a secret PIN. Money can be withdrawn from the ATM of the other bank also, but some extra charges has to be paid for the same. And second one, credit card. A credit card is a thin rectangular plastic card issued by financial institution which lets you borrow funds from a pre-approved limit to pay for your purchases. The limit is decided by the institution issuing the card based on your credit score and history. Generally, higher the score and better the history, higher is the limit. The key difference between a credit card and a debit card is that when you swipe a debit card, the money gets deducted from your bank account, whereas in case of a credit card, the money is taken from your pre-approved limit. Users can swipe the credit card to make a payment or use it for online transactions. After you apply for a credit card, simply make sure that the borrowed amount is repaid within the stipulated time frame to avoid penalty charges. Your credit card details are always secured with the card issuer and you should not share your credit card information with anyone to avoid fraud activities. This type of bank card has been used widely from the end of the 20th century. An account holder or any person can apply to the bank and can demand the credit card. The bank conducts a systematic study of the credit of the person, like how much debt can be repaid by him through card. This is determined by the bank on the basis of study. On the basis of this study, the bank issue a credit card with a pre-decided limit to him. When he makes purchase, the amount from his account will be debited and the amount will be credited to the seller's account. Balance statement is sent to the cardholder at a fixed time which he has to settle or repay with the prescribed time limit. Third one, debit card. A debit card is a payment card that deducts money directly from a consumer's checking account to pay for a purchase. Debit cards eliminate the need to carry cash or physical checks to make purchases directly from your savings. In addition, debit cards, also called check cards, offer the convenience of credit cards and many of the same consumer protections when issued by major payment processors such as Visa or MasterCard. Unlike credit cards, debit card do not allow the user to go into debt except perhaps for small negative balances that might be incurred if the account holder has signed up for overdraft protection. Debit cards usually have daily purchase limits, meaning it may not be possible to make an especially large purchase with a debit card. A debit card is a bank card used to make purchases with the cash in the cardholder's deposit account. Debit card grew out of the check cards, a financial instrument meant to replace writing checks for purchases and now can be used in lieu of cash at any retailer that accept them. Unlike credit cards, which aren't tied to cash deposit, a debit card can only be used if the account holder has money in the bank. This card can be used at the place where there is an arrangement to do the transaction through debit card. The card holder makes payment of his shopping through this card. This card is given to the seller to swipe after the shopping. The billing amount is debited to the account of the card holder. The card holder can spend only from the available balance in his account. In this part, we studied about different service associated with bank, ATM, credit card and debit card.